everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back. Dr. Muda Yusuf is joining me right now. He's the founder and CEO at Center for the Promotion of Private Enterprise. Dr. Yusuf, good morning to you and welcome to the program.
Good morning, Nancy. Great pleasure to be with you.
Fantastic. Let's get started. And I think I will start by asking you questions around the latest news that we heard concerning our foreign exchange reserves. I'd like to know what your views are. $41 billion now, we've been told, according to the Central Bank of Nigeria, the highest since 2021. I'd like you to speak around perhaps what we're seeing concerning these foreign reserves is as a result of structural changes, or is it as a result of short-term inflows, perhaps occasioned by portfolio investments?
Yeah, thank you very much. Well, the news of the increase in foreign reserves to over $41 billion, I think is good news. It's a very good development for the economy. It has positive implications for our investors' confidence, the perception of the economy, the prospects of even our currency, the stability of the exchange rate, and even generally the way things will pan out going forward. I haven't seen the breakdown of the components of the reserve. So it will be difficult to be able to know what component of the reserve is as a result of the portfolio flows, FDI, our own earnings as a result of what is happening, the improvement in oil outputs, and also some level of improvement in our non-oil exports. Because the current reforms have had some significant impact in many areas, particularly around the inflows of foreign exchange into the economy. The IMTOs, for instance, we are seeing a lot of inflows coming through them as a result of the liberalization that has taken place. We are seeing much better inflows as a result of the reform around export proceeds. Under the previous CBN presentation, if you have your export proceeds, it was a very difficult thing for you to bring it in because of all the distortions in the exchange rate at the time. So my hope is that not too much of a component of the foreign reserve is as a result of the portfolio flows. I don't know what percentage it is. If the percentage is high, then we have to celebrate very cautiously. But if the percentage is very low, which I think it should be, then it's something that should give us some comfort. But there's no doubt there's also a portfolio component of it, particularly as a result of the high interest rates in the economy and as a result of some of the high yields in some of our financial instruments. So there's no doubt that it will be part of it. But generally, the environment has been very favorable to the attraction of foreign exchange into the economy.
Dr. Yusuf, how durable and sustainable is this level of foreign exchange reserves, given the fact that we still have high debt servicing burden?
No, it's durable if we sustain the reforms. Even as we speak now, it's not as if we have not been servicing our debt. All along, each time these debt service obligations mature, we have been constantly servicing the debt simultaneously. It's an indication that the economy itself is recovering. And if we're able to sustain the confidence of investors generally, around what we are doing currently, I mean, it will be sustainable. And of course, you have some very critical factors or drivers, like what happens to the oil sector, for instance. Yes, we have done it. We have had some progress around the FDI, around non-oil exports process and so on. But forex from the oil sector, crude oil, gas, and what is even happening around the exports from places like the Dangote refinery. You know, those things are critical. But what happens to crude oil price? What happens to our oil outputs are very critical factors.
So aren't we
For instance,
vulnerable with these factors that you're talking about? Oil price,
no,
yes, volatility, even high import demand, as it were. So aren't we even still vulnerable to that?
no. The major vulnerability that we can have is oil price and oil output. That those
Oh, okay. The network just built on us. Let's take a quick break to reconnect with Dr. Muda Yusuf as we continue to talk about Nigeria's economy from different perspectives. Of course, just before the network went off, we've been talking about FX reserves growing to $41 billion. Okay, Dr. Yusuf, you're back now.
that,
So please land on your point on the vulnerability aspect I was talking about.
yes. So I'm saying that the point I was making is that the vulnerability is not as pronounced because we are getting influence from other sources. If it was that sensitive to what is happening, we would have seen some impact as a result of what has been happening to the volatility in the oil price. Oil price has been around 63, 65, 66, and all of that. Whereas our budget is 75. Yet, the exchange rate has been stable. What must have been responsible for that? So the vulnerability is decreasing. But that is not to diminish what happens to crude oil price and crude oil output.
Okay, doctor, there is this notion also that if our FX reserves are increasing at $41 billion now, Nigeria still have a myriad of challenges, challenges of inflation, challenges of households suffering severe hardship, being squeezed as we speak on every side. If we're having $41 billion in reserves, doesn't it make sense that the government, the government or even the policymakers as well as those, handling the economy should be able to fix the problem? Some people will say, why not even bring out money from the FX reserves and fix some issues that need fixing? Infrastructure, for example, needs fixing. There are other issues that need fixing. Why can't you just do that? If you're saying that our reserves are increasing, yet Nigerians are suffering, how much economic sense does that make?
No, you see, Nancy, we need to manage expectations. Now, the current administration, I'm not holding brief for them. But what is happening or what happened in the last 2 years was to rescue the economy from a complete collapse. Because we are coming from a situation where our net reserves was less than $5 billion, where our fiscal position was dependent largely on the printing of money, where we had to clear arrears, outstanding forex arrears on unpaid arrears of about $7 billion, where the airlines were no longer coming here because they could not repatriate their forex. So there were a lot of issues that needed to be dealt with. Because this is like taking a patient for a surgery. It will take time for the patient to recover. So to go through that phase and now come to a point where you now begin to say, because those things also have costs. There are cost implications. All these reforms, foreign exchange reforms, fuel subsidy and all of it, they have costs, which is why the citizens are complaining. But these are policy measures that needed to happen to salvage the economy, because the economy was already on the brink. Our letters of credit, as of 2023, We are not being honored by our correspondent banks abroad. So it's as bad as that. Because there was no forex liquidity to support our international trade transactions.
So
at that time, if you wanted to import anything, you have to pay cash. That was how bad it was.
so
So we
with
need to appreciate that this is a transition process. And the process has implications, which is part of the inconvenience that all of us are suffering. But what I can say is that the government needs to be more innovative, more creative in the palliatives, in coming up with measures to mitigate these pains. I think that is what is most critical at this point.
with what we're seeing now, FX reserves at about $41 billion, does this raise a case for the naira to be stronger and move in the green from about 1,535 naira it is right now to something higher?
Nancy, first of all, let's appreciate this stability first. There was a time the exchange rate was close to 1,008. People were predicting that it would go to 2,000. Now we're at around 1,005, 550, 515, 520. It's still early days. We cannot say because we had an announcement that we had $41 billion, then we begin to open up the space for more imports or for more people, to be importing more things at a cheaper rate. We need to make it a developing thing because this reflects the trend first of our forex we should be putting out there in the foreign exchange market. But what is most critical is to ensure this stability because you can see what is happening to oil price. If there are volatilities, you need those reserves to be able to stabilize the system. That is the essence of the reserves. It will stabilize the system in the event of volatility. We talked about foreign portfolio inflows. Supposing something happens at development is stable. Supposing they begin to withdraw their funds, that could pose a risk to the stability to stabilize the system. So I think for now, the emphasis should be on stabilizing where we are. And we watch the trend globally and domestically before we now begin to talk about pushing the FX to maybe 1,002, 1,003. The prospects are there. But it is the trend and developments globally and domestically that will determine how everything will pan out eventually.
But doctor, do you agree with me that the costs of this stabilization that you have said and that the government has been telling us is heavily borne by individuals, heavily borne by Nigerians, heavily borne by businesses? Businesses, of course, through tight liquidity conditions, high interest rates, and what have you. So how do we get out of this quagmire if the true price of stabilization, as we've been told, will be what we are seeing?
Now, what I can say is that the situation will improve gradually.
When would it improve?
Now, the stabilization,
we've been waiting for a long time.
Stabilization is Nancy, 2 years is not a long time. In dealing with the kind of distortions that we had in this administration, 2 years is not a long time. What I can tell you is that, yes, we are achieving some stabilization. Yes, there is a cost, both to businesses and to the citizens. Of course, there is a cost. But for you to appreciate the point that I'm making, supposing we had not done this, the situation would have been much worse. Supposing we had left the foreign exchange regime the way it was, where the liquidity was almost drying up. Supposing we had left the fuel downstream sector with wins and means, the situation could have been much worse. So I take the point, the government needs to do more, particularly using the instruments of fiscal policy, because I'm a strong believer in the use of trade policy, for instance, to moderate prices. We can look at the regime of our import duties and look at what we can do to bring down the cost of imports. Because no matter what we say, the cost of import is a major factor in this inflation. You have a depreciation in the currency, then you're also using the market rate to compute import duty. And on top of that, you have some of these items with high import duty already. So there's a lot that we can do around our trade policy without necessarily hurting domestic production. Even for those in domestic production, there's no reason why their inputs cannot be substantially reduced. I'm talking of import duty they pay on intermediate products, on machineries, on equipment, on spare parts. These are fiscal policy options that we can use. The same thing with taxation. For those in production, yes, we have a tax reform now ongoing. A lot of positive expectations are there, but there are also some concerns. But what I'm saying is that you can also use your tax policy instruments to deal with some of these things. This pains and hardship is not something we can resolve or solve through palliatives, because the country is very large. The population is huge. So giving bags of rice and giving noodles and all of that cannot tackle it. The approach has to be systemic, looking at the critical inputs and engaging those who are in production. I mean, there was a time Dangote was telling us of what he can do to bring down the cost of cooking gas. Has anybody engaged him to say, okay, can we have a discussion? What do we need to support you to bring down the cost of cooking gas? So that kind of engagement should happen between those who are producing and the government, so that we can put things on the table that may not necessarily undermine the reforms, but that can bring down the cost. Because all of this is about cost. It's about cost of production that is not being transmitted to the marketplace in form of higher prices. What can we do to support those who are in production with cheaper cost of fund? You can't be taking credit at 30% and you expect to produce and sell at a cheap price. It cannot work. Again, you can leave continue with the reform in the monetary space, but we can be creative in seeing how we can create a window to support those who are in production with longer term credit, with lower lending, lower borrowing cost. So these are the issues. And of course, we have problem of insecurity. That is also a very big issue. Again, it has been something that is looking very intractable because of the nature of the warfare. Because we are talking about asymmetric warfare. This is what the convention deal with. I'm not making excuses for them. So these are some of the things. But I know that it can be better. We should look at our budget and we should appropriate our budget in a way to effectively tackle these things. Review our priorities in spending. So that is why I think that a lot needs to happen on the fiscal side, on the supply side of the economy. So rather than concentrating on demand management, we are looking at how we can reduce the cost of operations and the cost of production, and engaging stakeholders in the real sector of the economy and other sectors. We give us as to what pragmatic solutions we can put on the table. It's not a theoretical deal with people who are on the ground without necessarily compromising or undermining all these critical reforms that are ongoing.
Doctor, there are some analysts that have said
Nancy?
that, yes. Doctor, can you hear me? Can you hear me, Doctor?
I can hear you.
Okay. There are some analysts that have also said that.
I can hear you.
There are some analysts that have said that the fiscal policy have added to the inflation that we're seeing in the country. You know that the inflation we're seeing is not necessarily that of demand pull inflation. Then there was something you actually did say when you were commenting on tax reforms, that there are also concerns it could have been a good law. Of course, the tax bills that the president signed in June that have now become law to take effect in January 2026. What are those concerns for you from the new tax laws that will take effect? Doctor, can you hear
Well,
me? Yeah. Okay, go
the
ahead.
tax laws are good, but can you hear me?
Yes, doctor, go ahead.
Yes, the tax laws are good. I mean, a whole lot of benefits, removing arcade.
Okay, Dr. Yusuf, can you hear me so that we can, continue with our conversation? Doctor, can you hear me?
I can hear you, Nancy. Can you
Okay.
hear me too?
Yes, I can hear you now. So please go ahead with your remarks on my earlier question on the tax law concerns you have, and if
Now,
the fiscal policy is indeed adding to the inflation we're seeing.
well, on the fiscal policy, I have highlighted what I think we need to do. We need to do a lot more. First, engaging those in production to identify their pains as far as cost of production is concerned. Yes, there are some rigidities which we may not be able to address within the process, but there are some things that we can do. And just as I said, we can begin to look at the cost of inputs, some of their intermediate products. And in doing that, we must be ready to trade off some revenue. Because sometimes revenue objective can be conflicting with productivity objective. It can also be conflicting with welfare objectives. So we must be able to balance that. We cannot continue to be looking at the international trade process as purely a revenue generating thing for government. We should be looking at how we can activate some of those policies to further bring down cost of production. That is the point about the fiscal policy. Now, with respect to the tax, I have said it is a very good law, but just like any other reform, it is a journey. It is not perfect. We are talking about a legislation of altogether maybe of about 4,000 pages. So you cannot really, identify, what are the key issues and all of that completely. But I was reading about the proposal to impose, I think, 5% tax on petroleum products. I don't think that this is the right time to do that kind of thing. We need to choose the time for that kind of thing. Then the threshold for exemption from PE of 800,000 naira per annum is too low. 800,000 naira is just about $500 in a year. If that is the exemption we are given, even the minimum wage is higher than that. So that threshold is too low. If you really want to ease the burden of the small people, of the ordinary people who are on one payroll or the other,
So,
they have things in capital gains tax from 10% to 30%. Now, we had earlier discussed about portfolio investment and all of that, how that has been helping our forex. Now, if you are slamming 30% capital gains tax, that may affect our equity market because it's moved from 10% to 30%. That may have implications for people who are in, and the equity market, stock market is where even investors are able to raise cheaper funds because the money market rates are so impossible, are so prohibitive. So for those who are investing in equity, if you are imposing a 30% capital gains tax, I don't think that aligns very well with our desire to support investment. Then we have the informal sector. This economy has about over 40% of GDP is coming from the informal sector. Now, if you look at all the requirements, filing of returns, doing input VAT, the output VAT, and so on, those things, the informal economy don't understand them. They don't know what it means. They are too technical. Therefore, how are we going to onboard them into this? All the sensitization that took place is mainly at the formal sector level, at the elite level. And here is a major element of the economy. You can't go to Okeani market, to Jankara market, or you go to Alaba market, or Onisha market, or Sabogeri market in Kano, and you are talking about filing of returns, this and that. Those things are key issues. And this is a segment that we need to manage carefully so that it doesn't have a backlash. 2026 is a pre-election year. And we have to manage it carefully so that it doesn't also have both social, political, and economic and political backlash. So how we manage and onboard the informal economy into all of these things is also something that is very critical. Because I was reading a report recently where the central bank gave instructions to the banks to report by way of reporting any transaction in any bank account that is above 25 million in a month. And I imagine that this is for purposes of taxation. We need to be very careful about this. Because the fact that you have huge transactions in your bank does not mean that you are running a profitable business. You could be a supplier, you could be a contractor, where your client is paying money into your account to supply something. Your margin may be very lean. In some cases, you are even making losses. So transactions in the bank accounts or in whatever it is does not translate into prosperity of a business. And we should be taxing prosperity, not taxing transaction. So because there are indications that there will be, huge elements of presumptive tax arising from this kind of things. So we should recognize the peculiarities of our economy. We should recognize that you have a highly informal economy, so that in the implementation of the tax reform, we take all of these things into account, so that we don't do things that will further exacerbate the social concerns of the citizens or of small businesses. So those are some of the concerns. Then there is this fiscalization, where you have to link your system to that of FIRS, so that all your transactions will be electronically monitored. Again, there is the issue of privacy of data. There is the issue of privacy of information. And this also presents some kind of risk. So these are some of the concerns. Then even for the middle class. Now, the only exemption in terms of threshold is about those who are earning 800,000 naira per annum. Now, look at the cost of rent. Look at the cost of transportation. Look at the cost of educating your children. Look at the cost of your health care. Look at the cost of providing infrastructure, the electricity, and so on, for you to continue either your business or your livelihood. These costs are heavy. And the way I'm looking at it, all the allowances that have been provided cannot sufficiently cover this cost. Because there are some costs that normally should not happen to citizens if government was providing quite a lot of things, like public transportation, like good health care, like good education. You don't have to worry yourself. But here, you have to pay for everything. And most of these things are provided by the private sector. It's very exorbitant. How much do you take a 3-bedroom flat, for instance, in Abuja or in Lagos, in a very good location? Does the current tax regime under PE, does it make sufficient allowance for that? How much do you pay for your children's education? These are conversations that will be ongoing.
You've
Just as I said, it is work in progress. The reform is a journey, and we continue to have conversation as the implementation progresses.
you know you've addressed those serious concerns, and I hope that they are listening, because even this that you're talking about, was it 2 days ago or so, I was getting questions around this tax reforms. Is it true that if my money pass 800,000 naira a year, they are all sort of things. So it's really nice that you are raising these issues, and I hope that those in authority are definitely listening. We have about 2 minutes to the end, but let me see if I can take a few questions from our viewers. This is coming in from Chang Dangana. He's saying, good morning, sir. Can the stability change the cost of living or transportation? Or what impact can it have in human life? So he's asking if the stability you are talking about, if it can change the cost of living or transportation. Then I think I would also add this question. If you indeed believe that this stabilization that we're seeing would give us sustainable growth, or perhaps it's a way for governments to manage this crisis in circles. And I hope you understand what I mean. If this will really lead us to the promised land, as they've said, or we are just trying to manage crisis in circles. So, Doctor, answer this in like a minute or so, then we'll end the program.
Well, stability can improve a whole lot of things. We are talking of transportation, cost of living, and all of that. It's all about investment. It's all about the cost of investment. If you have a sustained stability, cost of investments will come down. Ultimately, even the exchange rate will also improve. Cost of fund will improve. Inflation will come down if the stability is sustained. So there's a relationship. It can improve practically all sectors of the economy, but there has to be targeted sector-specific fiscal policy measures, tax policy measures, trade policy measures to complement all these macroeconomic objectives so that we can achieve some of the things that the guy was talking about. For instance, they are talking of transportation. We have to talk about import duty you pay on vehicles. These are specific issues which the government will have to address. So the policies have to complement each other. That is the point. Then as to the issue of stability and whether it will give us, of course, stability is good. We are talking of macroeconomic stability. It's a major objective. You cannot build something on nothing. The stability we are talking about is like the foundation. Then you have the superstructure about how to deal with infrastructure issues, how to deal with welfare issues, how to deal with productivity issues. That is another level in terms of government objectives. And you need the fiscal policy, the way our fiscal operation, our expenditure pattern, all those things are necessary to be channeled to support these structural challenges in the economy. So that we have good priority in terms of how we spend our money.
I think
so those are the things that can happen, to be able to support all these other aspirations that you mentioned about.
Thank you very much, Dr. Yusuf. Thank you for joining us today and for lending your voice to expanding these economic insights for us. Thank you very much, Dr. Yusuf.
Thank you very much, Nancy. Thank you.
All right. I've been speaking with Dr. Muda Yusuf, the founder and chief executive officer at the Center for the Promotion of Private Enterprise. We've been looking at the cost of stabilization. I've been getting a lot of messages here, but there's not much you can take. Thank you. I can see a message from Dozier, talking about what the stabilization means to an average Nigerian who cannot afford a meal a day. Anyway, thank you all for your company today and throughout the week. Have a fantastic weekend. Be the best you can be and be the change that you want to see. I am Nancy Naji. I'll see you all again bright and early Monday. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information, this is the best place to be. I'll see you all again in the next video.